everyone went from total panic to suddenly wanting to be a buyer, and just to see how, like, you know, uh, even though, some of the people that I talked to, I said, look, right from the beginning, you're not going to touch this. You're not going to be affected by anything that happens this year. Then there's a big sell off, and like, I got all these people reporting the news to me, and I'm going, guys, just chill, like, relax. Don't worry, the dollar won't stop crashing. They're not going to stop printing money out there. It's like, your bank account. You can keep all the cash in there if you want, but that's really what this trade is it's a bet against the dollar ever, like, getting any stability again. You know, if you think that the world governments are going to get it under control, you know, best of luck with you. you know. So, because I think that's what people didn't really understand. You're unable to buy at the low on Kraken, Betty? Yeah, I mean, I missed the low too, but like, I, I've I don't even have more money to keep putting into this stuff. So it's like, you know, yeah, it took a big fall. It's still way above my average price because I just started following the thing in last July or something. So, it's most of it was bought much lower. So, these little buys I put in there, I'm like, I don't have more to put in there. you know, I just wish that I could, I was like Michael Saylor and could buy like 88,000 of them or whatever those guys did, some ridiculous number of Bitcoin. We're all trying to get like one, or a half of one. And this guy, he's got tens of thousands of them or something. Jeez, just blows you away, right? So, you know, it's, and Elon Musk is doing all. He's not selling any of it. He's just reporting like old news, and people freak out and like don't even realize it's old news. It's just astonishing. Anyway, it's like these guys can't even come up with a new thing. It's like, well, let's repost something China said 2 years ago. What? Like nobody's paying attention. And so, yeah, interesting, right? So, all right. Did we go over this one yesterday? It looks familiar, Victoria. I think we stopped here, but we did go over it. Okay. Okay. Good. All right. Yeah, I think that's just where I put the block in the wrong place. So okay. So I'm going to move on then. Let's see. Ooh, there's a lot to read here. Who do we have here? Betty. All right. All right, Betty. Here we go. Now, we've got Starbucks, right? Boom, up here. We got a nice, big, violent pullback, right? Now, we called this plus, but when you entered, Betty, was this still a plus? Like right here. Is this trade still a plus now? Like if we draw this in, boom. And by the time that you bought, we had up here, and like if you bought here, you would call this igniting off the 200. And I would say, Betty, that I'd like to see a little more of this. I don't know what happened yesterday, right? The day before. So you see what I mean, guys? Like, and Jan, correct me if I'm wrong, but if I look at this amount of yesterday's data, why do I feel like there's a pivot right here from yesterday if we go back another 30 minutes? Maybe I'm wrong, but I just have this funny feeling that this is not clearing anything. And it's the reason I have this feeling is look at where the 200 is. Like this has fallen below the 200. And that to me means somewhere there's a bunch of congestion in this area. So, and the big bar is creating a shadow, yes. But we got a 100% wipe out of that big bar. And now this to me says we've got a trap zone. Because remember, the 200 is a zone, right? This 200 MA is a zone. And I would like to see it, taking off in the upper 50% of this first. So look at the first fluid move of the day. The first fluid move of the day, we had a little move down and it came up to here. That's the first fluid move of the day. Once we get a 100% wipe out of that, now we're lucky to get up here, right? We're lucky to get up here. So I like that you bought in. Could I have entered here? The answer is yes. You can enter there. Do I like it though? Well, we're fighting this 100% wipeout. So now we have the shadow of, like, what do we call this? We've got this bar, right, up here, followed by this bar. So can you buy? Yes, but on a longer time frame, what's the conclusion? Yeah. So, and I get that, like, perhaps if yesterday's close is here, you could draw this back to here, right? I'm not going to include all the way down to here because I think we're just going to start from where it closed yesterday, and we have this tiny little gap. But still, this is, what percentage would you call that? Yeah, 90, 100%, something like that, if we include yesterday's close. And tell me if you disagree with that, Jan, but that's a wipeout of most everything. Now, this is a powerful reversal, but what do we, like, this also didn't follow through down here. But what do we really have? Right? I'm drawing it out here. I just don't think there's any reason to believe that we're not trapped in a zone. Right? Now, that doesn't mean you can't play it and all that other kind of stuff. It's just that, like, what you want when you have a buy is you want to feel like there is open air above. This does not look like open air to me. This looks like the origin of trouble, which, it tests this area a few times and has trouble breaking through. Now, so let's look at what you did, right? It looks like there was a 2-lot entry here or up above. It could have been here. Absolutely, I agree. If we're just looking at the bars, yes, it could just be on the wipeout of the red body because the red body was long enough. You did a hidden red bar ignore add. I don't know. Yeah, I guess that's following the checklist, right? You got another 2 pushes. You took one off. You got up near the prior high. You took another one off. I like that. And then now you should have 3 by then. So one seems to be missing. Okay, so you did a big bar stop adjust for losing the prior high. I think that's good. I actually would make it even tighter because this one I don't expect to race off to new highs. I don't have large expectations for this. This to me is more like a scalp. And then this one, again, if we're in a trap zone, I just don't care what happens afterwards. It's, maybe it'll go up, maybe it'll go down. But to me, we have created a new trap zone here and here, and we just don't know what's going to resolve. Even though this wipes this out, it doesn't clear it. So, Betty, does that make sense to you? Like, Jan saying, also look what happened, hardly any follow through on bar 1, then failure to continue after the red bar ignored, right? So here's the red bar ignored, right? So this is not much follow through. And then a violent start to a down move, right? And it happened to work, right? You happen to get a good reversal at the 20, but over time, is this gonna, out of 10 times, once you look at just this portion, forget the green, but if you look at this portion, right? Sorry, my little one is a little bit unhappy in the background. So, but out of 10, what would you, if you take this red move down, what would you expect to happen, right? Even if like a violent move up, what do you expect to happen? Well, it may start powerfully, but I expect around here for this to turn around and go this way, right? Yeah, and that's what Jan's saying there, right? 50% is the best expectation you can have. So you were kind of entering very close to where a lot of people would be ending them, they'd be saying this is over. Probability-wise, right? Just in terms of probability. So Betty, just to make it clear, the ones that really go, what do they look like? Well, first of all, after this bull elephant bar, you don't immediately get this kind of thing. The ones that go don't start like that. Bar 4 is that thing. When you see that, expectations change, right? So even if I got in right here, yes, I would add here, I'd be out here. Boom, break even play, done. I don't even care if it gets up here, right? I just go this red move, and somebody was asking us what's the more advanced stuff, which you had that question, what are the more advanced things we can do? Well, we are kind of our challenge is to teach you guys the checklist, and the more advanced stuff, that really is black team stuff. And as you practice this and master this, which, I think people go, yeah, I get it, I understand it, I'm ready. I'm going, mastering something does not come in a couple months. Let's just be honest about that. Like when you're confident that you can let this do its work, and we had one journal that, was it Simon, I believe, or someone's just saying, or Dennis or someone saying about just doing one lot and kind of letting it go, just let it move and kind of get yourself out of the way. You got to be able to do that, right? But the more advanced stuff that I was talking about, I was like, okay, if I got in here and then I saw this bearish move down that wiped out 100%, and then I saw this, here's my ad, I'll probably go +2 right there, and then right here, -4, right, out. So if I was +2 at the beginning, stop event, add right here after this violent move down, and 50% is the end of the trade, right? So, think about this. Your first move up is fluid. And this is a different kind of whale, right? So those of you, this is your first time. The whale complete for this trade, after 100% move down that just barely doesn't stop, 100% move, the odds are 50%, and this is your whale complete. Whale complete is this, when you get the 100% wipeout. If it doesn't stop, and you get it all knocked out, right, 8 times out of 10, you'll definitely get this, and 1 or 2 times out of 10, you'll get up here, right? I shouldn't say 1 or 2. It's more like 6 or 7, you'll get this. A couple times, all you're going to get is about 1/3, or even 25%, and then the other time you'll be lucky and get up to the new high or above. It's just once your move is wiped out by an equal or bigger fish, the odds change, and your whale is a different kind of whale. It's a whale of a different color, right? It doesn't mean you can't get out of the trade. So this is how you turn losing trades into break even or small winners, right? Imagine, use these tools to change your odds, right? What if like 50% of your stop outs um, could just turn into break even? Like, how does that affect your 20 trades, right? What does that clean up? So if you have, those folders filled up, where you get, look at the ones where like your first move gets wiped out at 100% and see if there's a way where like this would get you out break even. And yeah, sometimes you're going to see this and it's going to take off and you're going to go, oh, I should have stayed in it. Nah, you made the right process trade, right? It's the process for what's statistically probable. Why does Oliver take profit? Like if you're in the black team, you're going to see Oliver take profits on one push because he's only got 5 minutes to do his trade, and he's got to keep talking to us. He's like he doesn't want to spend the whole time where he's supposed to be working with us digging out of a problem. So that's how he plays it, right? And but he can do that, and like Oliver is so good at this that like every single day you will see his first play become profitable. It's every single day. It's ridiculous. I don't remember, every year we'll see 2 or 3 like losing days, and he'll come back later in the day saying, oh, see, we got it all back. But usually it's just ridiculous, right? How like he's right on the first thing. So thanks for sharing that one, Betty. We're going to move on to Carlos here. And good. I hope that was helpful. Now, what do we got, Carlos? I like this bull elephant bar. I like this entry. I like this event stop. I think this is a rather narrow Fabulous 4, right? Now let's see. Did not add because of the strength of the previous red bar. I totally get it. I also, when I see this, go, I'm not going to just pile into this thing. That I think that is a wise decision, right? Because what are the odds of this being erased? It's very low. So you're not going to just pile into this with a stop like a few bars below. Let me ask you this. Like when you get in here and then from here you see this move, what's the probable outcome of this trade at this point? Like after you see this, what's most likely going to happen? Yeah, right? You go, this is probably going to get through here. It doesn't mean the trade's over. It doesn't mean it isn't going to hit the 20 and go, to a new high. But, by the time it gets down here, now you're fighting an even bigger, elephant bar, right? And, the probability of this is larger. So now I like that even though you didn't add, because there's no reason to add to something that's having some real problems, you followed the plan. You kept your stop. I mean, am I wrong, Jan, in saying this? I mean, I know that it's a mandatory ad, but we talk about, okay, your mandatory ad is not like the bar that follows the most violent bar on the chart, right? Like you can hesitate when the first thing you see is the ugliest red bar against your play. Right? So this is one of those higher level things, right? Don't enter into the shadow, right? This is the shadow. It throws power to the right of the most violent bar you've seen, right? That goes against your play. You just don't add that way. You add later. It can start like this. Pretend this is red, and then you get, a bunch of these, and we get away from that, and now you do it. Now that ad is good, right? Now you've got probability that this can get in here, and the funny thing is if this starts clearing and you get into this with a nice solid bar, this is actually a fluid move that you've gotten far enough away from it that this can move up. Now, I want you guys to understand the concept of horizontal and vertical distance. So I'm going to use the color red here. Usually, and this trade is unusual. What this getting to a new high with all these violent red bars, it's not really, this is crazy, right? This one is crazy, right? It's all this violent red and it's still making new highs. How often does that happen? Not much, right? But I'm going to say this, like vertical distance down of a move, right? So this move down from top to bottom is this size, right? And once it equals the horizontal version, horizontal distance, right? When 1 is equal to 2, see this? When this one is equal to this one, the power of this is wiped out. So if you start, some things happen, and now you start seeing green over here, this is wiped out, and this is actually a nice price void, right, for things to move through. Do you guys see what I'm getting at here? So when 1 is equal to 2, now these clearing bars, this just it's no longer a power, because everybody in here who shorted has gotten out of the trade by the time that this starts breaking through, right? So vertical distance is equal to the horizontal distance in terms of traders, right? All these people that got in short and were holding, it's chewed them all up horizontally, right? All the covering is happening down here, and now it's buyers that come in, and there's nobody over here that cares anymore, right? Time and space, right? Now, the other rule, and this is the advanced stuff that we were asking for, right? So if you're talking the next 2 or 3 or 4 bars, anything that immediately pulls back into here is likely to go like that, right? Especially at the 50% zone, or anything that goes above and triggers at the 50% zone, it still should go down, right? That's the gift play, right? And so, in the black team, right, the pullback is this. We have orders here, right? So let's say you entered here. This is the pullback, and this is whale complete. See what I'm saying? So this is when Oliver's doing that super fast stuff that we're talking about. His whale is like, in 6 minutes we went boom, 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 done, right? We're not saying to do those ones, but like, for example, take this bar. There's an ad here. This is whale complete, right? So, if you were, so that's what the pyramiding is and all that. So that's a faster version of everything. We're not doing that right now, right? We're not doing that, and I'm telling you, if you guys are going to start going into super fast, it's probably asking for trouble. And I know some of you are just going to do it, but I want you to understand the concept, right? These are concepts that are important to get. Now, Carlos here had a nice sell at the new high. I totally agree with this, because this is a violent pullback. This was an unlikely new high. It just wasn't supposed to happen. I think, though, this is your whale complete, Carlos. Like, I really think, you've got way up here and you've got a couple pushes past a red bar ignored. Um, I get not wanting to add there because it's kind of late. I prefer the first bar to start here and then have an RBI. By here, I mean off the moving average, but this one's starting like way above the moving average, and it's right into a sell zone, right? I just don't want to take the RBI right in the prior area of trouble, right? This was trouble. I do like the reversal, but there's something about it to me that now you absolutely can add, but it's like if you just took profits here, why are you adding there, right? So I don't, I agree with not adding, but a lot of people did, and then here's two pushes past a red bar ignored. I think this is whale complete for the play. Now the checklist will also say you got to add here, and here's the new high, right? So here's stop 1, profit take, stop 2. You don't have any more, but you could just trail this out, let it drop, and keep going. I don't really know what this stop out is. This is not an AMA stop out. Okay, that is searching for something, right? And because that's not a power trend. Period. It's just not a power trend. You have to sit through pullbacks. And here's the interesting thing. I'm going to go against everything I just said. Here's your low, here's your high, here's a scary looking pullback, and here's a trigger. And what's the location of where this triggers? What's the location of where this triggers? From low to high. Draw this in. Boom, 50%. It's crazy. It's so amazing how often that happens. Even the scary ones. So this is one where I don't disagree with maybe closing the trade up here somewhere. I just think this is a little late. But this is another one where you will say, I got out and the checklist did much better than me. I don't know. What do you think, Jan? Am I wrong about that? It's I know the checklist is going to say stay in here, but there's something yeah. Like there's nothing wrong with taking profits here, and because of the number, yeah, I guess it doesn't matter, does it? It really, that's the other thing. My saying don't get in here, it's just me intervening, right? It's me saying I don't want this trade to have any losses. Well, the answer is you don't know what's going to happen next. And here's your average price. Like, why be worried about it? Yes, this is a great new high. If you're going to sit in this and you're not going to take profits here, I think you have to wait for a pivot stop. Right? This is a nice fluid move up. And here's something that's interesting. When you get into a play and you see the scariest red bar on the chart, and then it gets cleared, I'm going to say this. The size of this red bar is, by the time this gets wiped out, the top of this is just the 50% mark. When you see a violent red bar like that, I expect, right, see how A equals B here in size? This one is equal to this one. When I see that scary red bar taken out, I expect at least this much movement. And do it. Go find a plus location, find a scary red bar. As soon as it's taken out, see how often it gets at least this far. You're going to see it all the time. Yeah, Jan's got a really good point. It's not our task to make trades profitable. Right? So, some people might close it here because they only had 2 lots, and this is a whale complete, right? That would be, I think that's acceptable, calling that a whale complete. However, if you don't take profits here, your job is to let the checklist play out, which means you got to sit through this pivot, right? And you have to add. You have to add right here. I have to say that after this violent red down, I'd be marking one off right there. Right? Can you see why? Do you guys understand why? Look at that violent move down. Right? So this is the 50% mark. I just, so if I added here, I would have to take some here, and I'd have to trail the rest out. If it doesn't make a new low, we'll get a new high, and this is the end of the trade here. See how the new high fails? I'm out, right? I don't know. Would you do the same, Jan? Like after this violent red right here, you'd still add because the checklist says so. Here's 50%, just because it's starting to look like new highs are less probable, or am I just making that up? Wouldn't close the whole trade, but I'd have to take one off. I'd have to take my add off, and I'd trail out the rest. And part, yeah. Well, I get that. See, this is what I'm getting at with this stuff, guys. You want angle and distance on the move up, and you want a shallower angle on the pullback, right? And then you want explosive moves up, and then kind of shallower pullbacks, and then explosive moves up that have more angle. What I don't like to see is like kind of gradual moves up, violent moves down, right? And then violent moves down, right? You see, this is why I get jumpier. But the funny thing is like Jan is saying, it's interfering. Like the question is, do you want to let the checklist do its work? And sometimes you get charts that look like this, and right now it's more often than not, you kind of get the opposite. It's like, somewhat strong moves up, and then very powerful moves down, and then strong moves up, and very powerful. Right? It's a roller coaster, isn't it? But somehow this one catches in really power trends, right? It's just interesting. And again, when things trigger in the top 50%, like that should just, every time you see that, something trigger in the top 50% of a fluid move. So identify the fluid move. Here it is. There's the top. These bars moved fluidly. And I would draw it all the way down to the low of the day. When something triggers, right, in that 50% zone, it should tell you, I'm going to leave this alone. So first, identify the fluid move. You can let it pull back 60, 70%. It doesn't matter. If it triggers around 50, you're going to leave it alone. It'll get there, right? Yeah, Jan's got a good point, It's like you're trying to pick one. You don't get to pick which one wins and which one loses. You just got to leave it alone. And I say certain things about like what I would do. And again, it's me interfering, right? Me taking some off here is me interfering. But if I can leave that last one on, it's going to take it to the top. And then I got to make a note saying I interfered again, right? Now you're saying no, not far away, take profits. Well, you mean like here? You know, because that's far away, I think, from where this started. Maybe I'm wrong. I mean, it's eBay, but for eBay to move a good dollar, you're doing pretty well. Um, the second leg. Well, okay. So this hugged the 8MA, right? You can see right here it hugged the 8MA, and now it has a liftoff right at the prior high, and then it turns into a 180. So I don't have a problem with someone closing the trade here, but again, the checklist would probably keep you in for the the break of the power trend, which would be down here. So yeah, hang in there and trail whatever trailing method you're going to use, right? And just stick to it. All right, so I'm going to move on because we've got a million of these. But thank you, Carlos, for this one. I do want to say this one you gotta chalk up as an interference, right? It's either a profit take up here or a pivot. And part of the reason it has to be a pivot is this is a nice, like if you identify a fluid move, it's a nice big long fluid move, you have to sit through a pivot. If you're playing VBSs and VSSs, wait for the fluid move, right? Here's a fluid move, and look at what the pullback does, right? This one, in this case, because we're in an uptrend, went the other way, right? So, so if all this wasn't here, here's a fluid move, 4 red bars, very fluid. But because it's it's inside a larger fluid move, it's just a pullback, right? But identify your fluid move, and then you've got to have something in on the pullback. Those are the ones that work, right? Especially the ones that trigger at 50% or above, right? Yeah, don't look at that P&L, Dennis. Stop trying to win, right? And and this is why it takes a long time, guys. It takes a long, long time because you need to fill up those folders that we talked about yesterday with trades where you keep writing down, well, the checklist did better than I did. You really need to mark it every time the checklist did better than you did. That's why Jan is always saying, and I think it's Carlos who does this, make two journals, one for what you did and one for what you should have done. And then you keep realizing, oh, in the end, the checklist does better, and you go, why don't I just get out of the way? I've proven to myself a million times that I'm worse than the checklist, right? Dennis is asking, when trading live, does Sterling give P&L in real time? There's no delay. And I don't think there's any delay on the simulator either. Oh, you mean the P&L update? Who cares is my answer. David, who cares like where the P&L, how quickly that adjusts? That number should not be influencing where your orders are. Your orders are at a price, not at a P&L. So yeah. Yeah, that's right, Dennis. It's a competition. Who's better? So here we go. This is Carlos doing version 2 here, right? Where just stop adjusting all the way up here, stop to color, and then out here, right? Again, I don't know about the 8MA, but I do think, though, you've got 2 solid pushes beyond this red bar ignored here. And that's the end of the road. So I'm going to move on from this one. So thanks for that. So Simon, here we are. Now you had I believe the email you had a question on had to do with this particular chart, where you made a mistake here or something like that. And I guess the question is, what was your original stop? And if your original stop was event, you took the right thing. There's nothing to do with that, right? This is the 50% add right here too, even though that you don't like adding in the shadow of a violent bar. So, maybe you don't take that and maybe you'll hang on here, but like this one just stopped. That's all there is to it. And there's nothing else to do about it. There's nothing that says, I want to go long this later on. You just go, this isn't a downtrend. It is clearly trap zoned by the time it takes out 100% of this, and you go, I'm not interested in trap zone. I mean, look at this. It's even dipped, and it's like trapped below, yesterday's Fab 4. So what I don't like is when things kind of ignite out of a trap zone like this, and then they get stuck back in the trap zone like this and start going down. That's when I'm starting to go, this is going nowhere, right? And this, I think this is a brilliant 2-color rule. So a new one for some of you guys out there who haven't heard it, there's what we have, the 2-color rule. There's three important things, right? First, here's your play. It starts with a failure to follow through. This is a massive failure right here, right? Like, shouldn't this create more follow through? I mean, this was you got your entry here, you have an elephant bar, there should be more follow through, right? Failure to follow through. This should do something. It does nothing, right? So the first part is the failure to follow. So we're going to call it NFT, and that doesn't mean like the Mona Lisa or any of that kind of stuff, right? And then 2, and then 3. So loss of color. Here's green taking out red. That should follow through. And here's, a second loss of green, right? So loss of green, third loss of green. Is that how would am I? And I would say I'd just stop it there. Because what's happening here when like you get a failure to keep going and then you lose your color again and then you lose your color again, you've got something that's just power trending against you. So I would say you can stop down here. I don't know. What do you think, Jan? Is that a good example of the 2-color rule? This is just something that power trends against you. So the 2-color rule is a way of closing the trade earlier because you're just losing every expectation of it following through, right? You've got your double dip, but we're not waiting on a triple dip, right? By the time you get down here, you're not, let's buy in here and see if it goes up, right? We don't go for triples, right? But basically, you give it a double dip, but you're not giving it a triple. Do you guys understand what I'm saying about that? That's the 2-color rule. But I think this is 1 and this is 2, right? And I think this is a real failure to go up as well. A loss of color, a loss of color. And I don't think I would, I think I would adjust the stop to here now and just be out. I'd go, this thing is just turned into a mess. And so this is a shortcut. It's something you guys can add, which is the 2-color rule. And we don't see a lot of them that show up as clear as this one. But to me, this is a clear, like, some follow through should have happened either here or here, and then we just keep losing green, and we losing green. Something's wrong, right? I just, now I don't care what happens after that. I just go, this thing, it's telling a different story, right? Interestingly, like look at this. This thing should have follow through, right? You know, it doesn't. You lose red, you lose red. Here's a failure to hit a new low, right? What's happening? We're headed up now, right? See what happens? It's right. So it's just like when you're starting to lose your intended color, something's wrong, right? And I'm not saying that this is anything playable. I'm just saying if you start looking at it and realizing how often that you start losing your intended color, and then everything you thought about the direction turns out to be wrong. So I hope you guys took notes on that, those if you haven't heard it before. But I'm sure we'll see it in other journals, right? Questions on that? Jan, do you think that's a decent, like, this is a decent chart for that? Or would you say that it's not the... Because I think this is, to me, it's just clearly, no? Okay, I was wondering if, because I think Jan talks about it like as if it really attempted to go up first, and then you lose color, and then you lose color, and now you're out, right? But I think this is a yeah. Yeah, I think we have different definitions of the first failure there, but we'll see what happens, right? I think this is almost a two-color rule too, right? So moves up, failed new high, failed green, failed green. I can see wanting to be out here, right? But that's kind of late in the play. By the time this gets up here, this is a stop adjust, right? Pivot stop adjust. And but anyway, so let's look at what Michael did, right? Boom. Long two. Great profit take. Now, once we've made a very nice big fluid move, and we've lifted off from the 20, these ads don't have good odds. And this one is below the 20, but it's a better ad. Now you took a break-even stop here, I guess, right? This was the break-even stop. And I don't disagree with that. You've got nothing else to go with except the fact that this was a pivot, and I would call that 75%. And so I think this is the stop where the whole trade closes out. Right, this whole chunk of change made an attempt, and I think when things go I say I think, but the checklist to me says this is 75%, this is a pivot, and here's your 2-bar break right here. You guys get that? And I do not do a solid bar stop adjust here. I think, some of you might, but I don't. Interestingly, though, the solid bar stop adjust is exactly where this would happen. So you could do it, but I don't like it when your solid bar is just a group of solid bars, right? It doesn't make sense to me when it's just a bunch of solid bars. I like it when you have like a solid bar, and then you have some smaller business here, boom, and then you have a solid bar, right? And then you have some kind of whippy inside business here, and then you have a solid bar, right? Those are better stop adjusts for a solid bar. That's what it's supposed to look like. But you can do it. You can do this. It's just why wouldn't I like that? Why wouldn't I want to solid bar stop adjust here? Think about it, guys. I'm challenging your minds here, right? Yeah, you're never going to get a pullback if you put a stop under that one, right? In this particular case, right? You're not giving, like, what if the next play was for this to come down here, and do this, and then go like that? Like, you'll never catch that play, will you? Right? Now, why is this break even stop okay? By the time we get up here, why is that break even stop okay? Based on what I taught in the, yeah, right? So if we go from here, and we go from here, this could come all the way back to the 20 and catch and move off, and it won't even get to break even. And look at that, it'll still trigger, like, right? I think that it's just so far away that I think break even is okay. But I do think once we go sideways, we've kind of got like a time stop here. We've got 1, 2, 3, 4, 5, 6, 7, 8. We've got like 9 bars here, and I think this is a pivot. It's a failed attempt to hit a new high because it is a tiny pullback that does trigger, right? We do have a triggering. We have the taking out of color and a 2-bar push, and it fails here. This is a pivot stop adjust. So, and even then it triggers down here, which is still, if you look from the low to the high, it's pretty close to 50, right? A hidden RBI, when you do that, are you really? No, it's a stop to color. This is not, you can't see a color there. Hidden RBIs are kind of lucky business. Sometimes they work, sometimes they don't, but it's just not as powerful as a real color. You can do it, but you're just asking to get the trade wiped out. I mean, you move the stop here, get a pullback, you get wiped out, and then you miss the move up. What is this first move? Right? Is that a fluid move? Is that a fluid move? Right. Super fluid, right? You do not want to miss the 50% trigger, and you got to take this. I think this is, scary, but like if you stayed in this play, you've got to take this because it's triggering in the top 50%. And yep, this one is one of the ones that messes with you and then goes to new highs. But isn't it amazing, like, no matter what you do or what you think about how strong this goes, if you had a fluid move first, and then you get something that triggers around 50%, this one messes with you, but it still gets up there. It's crazy. But it's predicated on this, right? You got to have that first. If you have a mess over here, if you have scrambled eggs over here, and then you get a fluid move down like this, then this is the move that's in play, right? But because this is inside this fluid move, the 50% trigger has some follow through. I mean, this is what I study anyway. I just like identify a fluid move first, And because in the middle of the day and all these other times of day, if you don't have this, it just doesn't go anywhere. Get this first, and then these things work. All the ones that don't have this, it goes nowhere, right? It just doesn't. So, but thank you, Michael, for this one. I think that's a pivot stop adjust right there. All right, here's another one with Michael. All right. Looks like we did a middle of the day sort of trade here, right? Failed new high into the 20 period moving average. Took profits right here. I think that makes sense. I like this entry better, right? Failed new high, right? So boom, prior area of trouble. You might get a small risk entry here, but you don't know. But once I see this hidden green bar ignored, I think follow through is coming. I don't like it in a rising 20 MA, however. But this one clearly was having problems, right? And I definitely think you got to take that profit. And if you take all the lines off the screen, right? If you take all the MAs off the screen, this is great, right? Market law 4, new low, add, new low, big bar stop adjust, you're out. Fine. So I think that's interesting, and I think some are going to say, well, the rising 20 MA and blah blah blah, but it kind of, by the time we got to this market law 4, are we in a wide state or a narrow state? And this is where I do think it's a little bit debatable, right? Some people are going to debate this, but I like that you just threw in anyway. I mean, Jan might argue with me on this one, saying, where does it say to go against the 20 MA and blah, blah, blah. But, right, I think you got like a small risk entry up here, market law 4. It's got, right, it's had liftoff here from this thing. And I think it's kind of a wide state deal that, kind of moved down. And I think this is not wrong, but I probably would have held on longer, because I look at this as the beginning point of this move down. And I would say, if that's the beginning point and I'm just in my last lot, let it go. Let it test the 20, see what happens, see if we get a new low, right? So, and I think you got lucky though. Like out of 20 times, when you fight the 20 MA and you just short like against a rising 20, is that going to work? That's where I kind of wonder, right? So, interesting. It's interesting. You caught an interesting counter trend play that, and based on what we talked about before, see how once it wiped out this red, it ended up here. It didn't make a full 100%, but it got some distance above this thing, didn't it? So I think that's pretty interesting. Like when it wipes out something that scary, you get almost that much distance above it, at least. This one didn't survive the test of time, but Jan, I think I should hand this over to you at this point. Are you able to project?
Yes, projection working again. I tested.
I know you were trying to patch there.
It is working.
It isn't?
But bear with me.
Okay, great. All right, so I'm gonna.
Please bear with me and stay around for at least the first few minutes, because I don't trust any of this Omnovia stuff. So let me see. Where are we? Which sheet is this? check. All right. Yep. 76, right? Is that right? No. 73, right. Okay. Yeah, perfect. Okay. So I take it I'm audible. I think the sound is okay. All that's missing is my screen. Let's see if we can get it shared. Yes, there it is. Okay. What happened to the background on here? I don't. Anyway, it doesn't matter as long as it's visible. It's visible, right? Yes. From what I see here, it should be visible. Okay. All right. Perfect. Then all we need is a marker pen, and we start with another trade by Amsarai. I hope I'm not destroying your name, Amsarai. I'm sorry, I don't know how to pronounce it. I'm hoping you're used to that. Anyway, trading Morgan Stanley here. Identifying first a narrow fabulous 4. I love when you guys do that because it makes it clear not only to yourself but also to the people that are looking at your journal what you were seeing here, how you were looking at it. Okay, so he sees a bull elephant bar here. See, bull elephant bar. Okay, and then I guess the plus is about the position. I'm guessing here. I'm not sure. He's entering here and calls that anticipatory entry. It's not really anticipatory. Then it should be in the first bar, right? You enter in this bar here. That's an anticipatory entry. This is more like a late entry where you hope that it drops into your order. That's very different from anticipation, of course, right? Of course, the result in this case is the same, but you just don't know. It may very well run up here and never come back, and you will not be picked up here, right? So instead of anticipatory, it's they call it like maybe like a late limit entry. 2 last long here. Stop. Apparently an event stop. Okay. And what happens? It drops to stop, and he's not taking the stop here. Oh, cardinal sin, right? Must take the stop. You put a stop. I mean, why do you place a stop here if you're not taking it anyway? Right? That doesn't make any sense. So he did not take the stop. Instead, what he did is he lets it drop down here and then actually adds again here and gets out here at around 40%. All right. So with a small loss, I'm not sure, or actually with a profit here. Okay, fine. Okay, so result-wise, this looks really cool, right? It's great trading. Fantastic. This could have been a loss, and he turned it into a profit. Okay. The only problem with this is that to actually trade this way is going to give you a lot of trouble in the long run because there's no consistency here, right? Not taking the stop. In this case, it actually gave you a small profit, but how many times is it going to give you a much bigger loss? If you collect 20 of these trades where you don't take your stop, what do you think the result is going to be? I think it's going to be a big minus, right? And this kind of little profit here or avoided loss is not going to be able to do anything about that. So you're just increasing your losses. Another way to do this, of course, would be to use a much bigger stop. That is okay. You can always use max loss per trade stop if you want to, okay? However, you have to use it whenever your event stop is close to the MA200. But if in other cases you, for whatever reason, you feel that you can afford actually a max loss per trade stop and you want to use it, there's nothing wrong with that. In that case, if you do that here, then you will still be in the trade here and you can add here and get out here at 50%. So the idea to do this, that's okay. That's good. However, but you have to set up your trade that way. If you put your stop here, then it's just over and done. You're out. All right. So So good trading in the sense that this kind of tactic is okay, but bad trading in the sense that not responding to the most important thing that there is in trading, which is the stop. All right. Okay. Next trade. Anyway, thanks for sharing that, Hamza. That's very good to see these trades where actually you make fundamental mistakes, right? Because we all do that, and it's important to bring that to the surface and actually learn from it and deal with it. It's much better than hiding it somewhere and not doing anything with it. Okay. Next one here is from Akke. So we have here XOM. Again, Akke also marks the Fab4. Love that. Then identifies a bull elephant bar here. In position plus, excuse me, in position plus, yes, plus or maybe even plus here. Because look, you're actually entering, oh, wait a minute, you're entering here, okay, yeah, okay. Yeah, plus, okay. Plus or plus. I think both are right. Plus is clearly here. I think nobody will argue that this is like plus here. This is like somewhat in between. Okay. So anticipatory event entry. Beautiful. Why? Well, because this is a bull elephant plus. Remember, if you take out 1/3 of that bar, you just wipe this off. This is not there. This is definitely still an elephant bar. I think there's no question about it. So that means that by the time we get to this level here, you're moving into plus territory and it's time to give it a shot, provided that this bar is at least 1 minute old, right? Even more probably, but at least 1 minute. You do not want to do this if the bar is less than 1 minute old. Okay, so hidden RBI1 sold again because of risk. Sold again. Oh, you added one here? Is that what you're saying, okay? Is this, I'm not sure what you mean by hidden RBI1 sold again because of risk. Okay, so you added and you sold it again. Oh, now I get it. Okay, so your risk was getting too big. Let's take a quick look at that. So you're getting in roughly here at 33 and your stop is roughly at, I'm guessing it's at 90, okay? So you have like 45 cents risk here with 2 lots. And that means you have a $90 risk on this trade. Your max loss is $100. So you added here, he realized that his risk on the trade was now above $90, saw the mistake and immediately closed again. Excellent. We all make these mistakes, but the worst thing you can do is just stay in the trade although you realize it, okay? You see this, you have to immediately take action to reverse your mistake as much as you can, so you stay within your risk parameters, okay? Beautiful. Okay, we go on here, and then you do add here. Now this is a little puzzling to me, Akke, because you're adding here, but your stop is still here, right? Your stop should still be here. So if you cannot add here, then how can you add there? How is that possible? You put in an extra stop. Okay, so this is a separate stop here. This is a separate stop that actually goes with number 2, right? Okay, so now it's different. He has $90 risk in the trade and he adds here. So now you go like 46 to like 60, well, 25 cents extra, I think, right? I think that bar is like 25 cents. So now you have $115 risk in the trade. Is that roughly correct? So that is more than $100. So actually, although this is in itself, this is a good action, okay, because now you are using a separate stop for the add here, but still, unfortunately, it's not good enough because it still drives your risk over the max that you had the max limit that you had promised yourself, because that's what this is, right? You had promised yourself you would not take a risk of more than $100. And what are you doing here? You're doing it anyway. Right? Okay, so beware of that. So good ad, but you could not afford it. That's basically the conclusion here, right? Because you haven't really gained the right to move your stop here. Okay. Maybe it's a good question at this point. Why is it important that he should not be moving his stop here yet? I mean, you're not allowed to do it, right? Because there is no pivot yet. So there is also no stop adjustment. However, why is that important? What about this chart tells you that it's actually a good idea to maintain your stop here? Any suggestions to that? What is there in the structure of this chart that tells you to do that? Exactly, Betty. This big green bar here is support, right? And what else is there providing support? There's more providing support here. It's not just the power bar. The rising MA20 here, look at that. So there's two things meeting here, support to the right and support to the upside. See that? There's Oliver's Egyptian cotton net, right? So this whole area here is a lot of support. Any dip in here is likely to bounce, right? So you don't want to move your stop. The stop has to be here. It's important so that you give the stock the chance to actually dip in here and then take off instead of stopping you out. All right? Anyway, so it's not allowed according to the checklist, but for a good reason. See? For a good reason. All right. So one added here, then taking one off here. And that is because of a pullback. And I guess that is because you have a new high here, right? One lot taken off. Question is, where is the stop? I see no indication of any stop adjustment here in this chart, in this journal. It's missing, right? I don't assume you're still maintaining your stop here after that profit take. Or are you? Now, you moved it up to the pivot, I hope. Is that right? Because that is what the checklist tells you to do here. Now you're going to protect, because now we have accomplished something. Now this has changed. Of course, there's still support here. But now, based on that support, we have actually made progress here in the chart. We have actually accomplished something. We're on a new level, no price level here. So now it is time to start to defend that. Okay, if the market would drop below this level now, then there's a serious problem. That means it could not hold the high here, and also that it takes out all these bars here. It's time to be out of the trade. So having the stop at this level makes total sense. Okay. All right, so stop here. Then what happens in step 4 is you're adding again to the trade. All right, you can do that. I'm assuming that this here is your stop only for this lot here? Or is it also the stop for the rest of the position? Do you have 1 or 2 stops here at this point? The rest too. Okay, so basically what you're doing is you're adding to the position and you're quickly jamming up the stop here. Right? Actually, when you jam up the stop here, what are you asking the market to do really? This tiny stop. What is a big risk of doing this? To take you out of the trade, right? That is basically what you're doing here. If you take a very tight stop here, you are actually telling the market you're almost asking, please take me out. It's like gambling. It's like maybe you get more or you get stopped out. Well, that is not a very good thing to do. If you really want to play this, then you have to give it the room that it needs, okay? However, you can move the stop up at a later stage. So when you get here, oh, wait a minute, that is in the journal. Sorry, that is in the journal. You're kind of getting to 5 here, and now you're moving up the stop. Now, that is okay. That is acceptable, I think. Okay, this is a pivot stop. Betty, it is a pivot stop, but only once we get here. And that's exactly what he's pointing out in the chart here. 0.5. Now it's a pivot. So now it's okay to move the stop up here. Okay. And then you get stopped out here. Okay, you take out 2 here. Yeah, because it misses the new high. All right, you do that. And you get stopped out on the rest here. That's fine. Yep. So very nice trading overall, Akka. I really like it. Of course, there's always these tiny things here with risk, enough risk, not enough risk. Those things happen, but I like the way you corrected the ad here, because that tells me that you are conscious of what's going on. That is really very important. Okay, and it's okay to make mistakes. We all do that. That's our lives are full of mistakes. However, it's important how you deal with the mistake. What do you do when you see the mistake? That is really important, and I like what you did there. Okay. The only thing is about the journaling. Please pay some more attention to the journaling, because there's obviously some information missing from the journal. I think it could be a little bit more complete, especially regarding stop adjustments. Okay, but otherwise, great trading. Thank you. So, Victoria. Let me see. Victoria is not here. Oh, yes, you are here. Okay, great. Uber is a really nice stock to trade recently, I think, except for today, right? Today was a full stop out on Uber. It caught me as well. But it happens. It's part of the numbers game. All right. Identification, narrow range bar. All right. You think you're talking, this is just the tiny bar here. Okay, that's actually a good name, I think. So basically you have your position here, which is plus, and being in position plus, basically you're looking for an excuse to go long. I think that's the way to look at it here. And that's perfect. It's perfect. So as soon as any bar is taken out here, which happens here, you have a good reason to get into the trade. All right. 2 lots long. Stop here. All right. We'll talk about that. Then we go on here. Then what is this, Victoria? Stop should have been max loss per trade. Absolutely, yes. This is typical max loss per trade stop. Why? Because we're coinciding with the MA200 here. So this stop has to go down here. It's very well possible that this stock dips back here and bounces off the MA200, and you just don't want to be stopped out then when that happens, okay? Okay, so we dealt with that. So what is this here? This is actually an ad right here, because we're ticking out red here. So this is potentially an ad. But you're saying here, I missed an RBI, but I think you could already add here. It's like a small red bar takeout, or maybe you call it an NRB, like you did before. Wouldn't you agree that this is an ad here? Okay. Now the question is, of course, as always, you have to calculate if you can take that risk, right? Because you have only $75 here as a risk, and that is just, as you can see here, that is very tight, right? It's very tight, because look at this trade. This trade requires a max loss per trade stop, right? And because this is so tight here, this fabulous 4, you probably want it here. So that means that it has to be at least at 40. Or maximum 40, right? You're getting into the trade at 20 here. So you already have $80 then. So you cannot even afford one lot if you have a decent max loss per trade. You're already like walking on your toe tips, right? So just wanted to point that out. So okay, so adding here is probably not even possible. Then you say, take profit on 3 pushes. Well, you entered here, right? So let's say that this is the first push. And I think it was a question by Simon. I hope we get to your journal later, Simon, but maybe not. So talking about pushes, you asked about clarifying pushes. So you could say that this is a push, right? And why is this a push? Because it's like a surge in your profit and loss, okay? That is basically, so a push is not something you can really measure in the chart, really. It's more like something you see in the chart, or you like see or feel or whatever in your P&L. It's like a sudden surge in profits. Okay, so here it goes up and pulls back, and here we go, another push. See that? Pause, and there we go with another push. So this is actually great. This is your 3 pushes. Do you see this, Simon? Does this help a little bit? So it's a bit of a fuzzy concept. I mean, there is no mathematical science to it. You see, it's something you have to get used to, and you have to start to feel when you see the chart. That's basically what it is. Okay, it comes with experience. So I hope this helps. So 3 pushes, take profit. Perfect. I'm guessing you. Excuse me. I'm guessing you're taking one off here. No, we have 2 lots here. Here we're adding 1, then we have 3 lots. You did not take one off here? Oh, you took 1. Okay, so -1. So when you're adding again on the pullback, you're adding 1 lot here, and then we have 3, or do we have 2? I think there's something wrong here. What am I missing here? 2 lots long. Take 1 off here. Because if you take 1 off here, then you have only 1 lot left, and your add will give you 2 lots, right, Victoria? Oh, you did not take the profit here. Is that what you mean? Okay, I get it. Okay. All right, you should have taken a profit here. Yes. Well, should have. No, you had the right to take a profit. Let's put it that way. Okay. And you probably would have done so if it would have been a good idea to do that, because also look at this, guy. You enter at 10, and here we're at 80. You have 70 cents in profits. So that is absolutely fantastic, of course. So you have to take 1 off there. I think it's a very smart thing to do. Okay, whatever. So you add actually here, and then we move on, and then you take your profit here on a new high. Okay, say this is my pullback, there's my new high, and I'm taking 1 off here. Okay, perfect. In the meantime, your stop is still here, correct? You moved it in 4, yes, but that's after the profit take. Oh, here, sorry, at this point. Okay, yeah. You see, not taking profits here, or actually I should say, maybe I should say it different. At this point here, if you take these profits, what would be a proper stop adjustment here? There's only actually 1 that is allowed here, because you're still before the pullback, right? So there's only 1 possible stop adjustment here that you could consider, and that is to consider a break-even stop. Is that a good choice here, a break-even stop? Yes or no? I think it's great. Maybe not yet at the profit take, but definitely on the follow through. This bar here, this particular bar is pushing it so far away now that a drop, once you're here, for example, right, 50% drop, that's somewhere here. So a decent pullback should never go deeper than here, maybe a little bit, but that's it, like to the MA20 roughly. So placing your stop here at break even is a very smart thing to do. It should never get there. Okay, it will not harm your chances of surviving a pullback. Is that clear? Okay. All right. Because basically by moving it here, if from here, suppose you add here, right, and it falls all the way back, would you have been in the trade all the way until here, till it hits your stop, stopping you out with a huge loss? I doubt it. I doubt it. Okay, so moving on. So 1 off here, okay, and then we have our stop now here at the pullback, okay. and then another big push up here. And then you take profits after a red bar. See that? You're taking profits after a red bar. That's a no-no, right? That's a no-no. Okay, so basically this is not a good profit take. The only thing you can say about that is that this stock has now already made like $2, right? So $2 up. So I can see why you did it. But maybe it would have been more logical to do it in this bar on the follow through here. So you take your one lot off here, and then you get a big follow through bar. Okay, you have two options. Either you take one off here because we're far away, or you say this is a big bar and I'm waiting for follow through and I'm taking it off there. But then you can't do it because now the red bar shows up, right? Okay, anyway, trailing out the MA8 here and then being stopped out here on a 2-bar break of the MA8. Beautiful power trend here. Look traders at the distance. This MA8, there is a nice distance here. See that? The bars never really get close to the MA8. There's a healthy distance there. So you will not be stopped out by just any volatility wobbling there. Okay, so that's the MA8 is actually the right one to pick here. Okay, as a matter of fact, you could probably already have done that a little earlier here, but then of course your big bar stop is coming, and then you anchor to the big bar. Okay, all right. So very nice trading here. However, I do think that this stop adjustment is too late. Because at that point, there is so much profit that it doesn't make sense really to give back a whole dollar here just because your stop is still here. And as mentioned, there was a logical moment to move your stop, which is here where you should have taken profits. That would be the right moment to move your stop to break even and at least take this trade out of the danger zone, right? But otherwise, great trading. Very good. All right. Next one is another one by Hamza Reich. Okay. Trading Oracle here. And marking that Fab 4 again, like that. And then he sees a bear elephant bar. And I think the minus in front of it means that he means position minus. Let's assume that. Okay, max loss per trade $90. Okay, so bear elephant bar here on Oracle, and he enters here 3 lots short at this point here. Okay, 3 lots short on confirmation. All right. Let's see what else do we have. We have a confirmation entry here. Okay, yeah, that's fine. And then we have a max loss per trade stop here. And where does that bring us with $90? Entering roughly at 35, I think. 35, $90, 3 lots, 30 cents, so that's 65. So his stop is actually here. The max loss per trade stop, it's not here, it is actually here. See that? So putting it here, I mean, saying that you want it here is nice, but it just conflicts with the actual risk here. Now you say I entered 1 lot extra by mistake, increased my risk for MLPT. No, it did not increase your risk for MLPT. This is a very common mistake. It did not. Your MLPT just stays the same. What happens is your stop is actually going down to the point where you hit $90 loss. That's what's happening. You see? It's the other way around. So you're not increasing the risk. You're actually pulling your stop down. There's a very important difference here. Okay? Should have immediately closed 1 lot. Yeah, perfect. Exactly like Akka did in the other trade, right? That's the way to go about it. You have to close 1 lot. And then the other thing is, so he's being stopped out here with three lots here. And if I estimate this correctly, I would think that he has a loss of approximately 35 to to 95, let's say 60, like $180, okay, on the trade. So what is wrong here is, so first of all, as he already points out, the position size is wrong. It's too heavy. Cannot afford 3 lots short here. No way, okay? Then I think the most important mistake here is to not understand the meaning of max loss per trade, or at least that's what I get from seeing this journal, right? I'm reading it. Maybe I'm understanding this wrong, but this is the way I understand it. Not understanding what MLTP is all about. MLTP, max loss per trade. That's right. It's spelled wrong here. Max loss per trade. MLPT is a money stop. It's a dollar stop. As soon as your P is the only profit and loss stop that we have. We don't allow ourselves to go over this number that we have promised ourselves. So as soon as we have $90 loss, which is probably here somewhere, got to be out here, because you see that profit and loss at -90 and you got to close the trade. Thinking that it's here is wrong. It's not. It's here. Okay? I think that is pretty clear. Okay? The entry is cool because this is a great igniting bar, right? Coming out of the Fab4, and it actually follows through. So this is a trade that you will take every day. Each time you see this entry, you should just take it. Of course, sometimes it doesn't work, like in this case, and you get stopped out. Okay, but all you can manage here is the risk, the size of the loss. That's all you can manage here. But you have to accept the loss. That's an important thing. All right, so that's about it, I think. Yeah, okay. Ooh, Henrik is asking that difficult question. Would this be a stop and reverse, Jan? That's a good one. To answer that question, you have to ask yourself another question. Is this enough violence? I'm not talking failure here, because it fails, right? Okay, but is this enough violence to take out the entire trap zone, including the MA200? That is really the question here. Because if you stop and reverse here, what you're saying is it's going to blow straight through it, right? And I think that's questionable in this case. I wouldn't really say that there is enough violence to do that. It's just not enough. It's not strong enough. But that is always a very difficult assessment to make. The best thing to do, especially in the beginning, is to just say that I will not do this. I just won't take any longs in position minus, right? This is position single minus still, right? That's where we're coming from, at least. Position single minus trap zone. So actually you have to position against you, and you see a bull 180 here, right? So you're going against the position straight into all this overhead resistance. Is it going to take it out? Don't even ask yourself that question. Just don't do it. Okay. So my recommendation would be stop and reverses. Stop and reverses in positions single plus or single minus. Just avoid that. Okay, at least for the time being. You may monitor them. You can write it down. You can collect these charts, of course, and see how this pans out. And if you have a good feeling for it, then you can start to use it. But in general, stop and reverses in position single minus, single plus, straight into the trap zone are very often a failure also. And you get stopped out twice and your day is over. Okay? Yeah, Henrik, you're saying it's a strong reversal, not enough. It depends on how strong the reversal really is. You say, is this strong enough? This is just a normal elephant bar, right? This is not like a plus bar. So neither is this one here. So this is just an ordinary bull 180. Now, bull 180 is a strong event. But what we're really looking for here is a violent event. That's something else. We need violence here, not just any ordinary event, right? We need violence. So if this bar would be twice as big, that is a different story. Then we have real violence there. And then it looks like it's going to break through this whole overhead resistance. It won't hold. But this is not violence in my book. Okay? Well, this is a bull 180 in the wrong location, okay? That's what I'm trying to say here. Okay, fine. Let's move on to a trade on Intel, another one by Hamza Rush. Okay. No, wait a minute. I'm going to skip this. Oh no, we can do this one very quickly. Okay. Just trying to make sure that we can do as many journals as possible. And well, anyway, okay. Bull elephant bar here. Well, I think we can deal with this really quickly. Is this a bull elephant bar? What do you guys think? Is this a bull elephant bar? No, it's not, right? Compare always, especially with the first bar. Look at the size of the bars here in the trap zone, right? In yesterday's congestion zone. And look at the biggest bars there. This bar is about the same size as this one, okay? A little bigger than this one, similar size to this one. So is this an elephant? No, it's not. It's not. It's just a small bar. So to anticipate here in this bar is a no-no, because what do we need to anticipate? We need an elephant plus bar, right? Elephant plus meaning, well, this is not really an elephant bar, we just said, right? Let's assume that it goes like this. Now it looks more like an elephant bar, right? This would be better. Now we're having an elephant bar here. Okay, so now if this bar moves on here and produces even more here, now we're talking about an elephant bar plus. Now it's time to anticipate. This is way too early, and it's not even an elephant bar. Okay, this is a wrong anticipation. Stop here and being stopped out. Well, that is correct. Event stop and stop out. So that's okay. You took that, right? Okay. So you may want to ask, what is this? You could call it whatever you like. Ultimately, the name doesn't matter, of course. But let's say it's more like a big narrow range bar, or maybe like a big narrow range bar. Also, another thing is this bar has a lot of tail here. It has tail here. More than 50% of this bar is tail. See, that's very indecisive. This bar is a nothing bar. It's a neutral bar, actually. It's just a neutral bar. If you want to do anything here, you should at least wait for a takeout of the high. That's okay, because you have a small risk and you have the position in your favor, so you can give that a shot. But it has to take out the high of the bar. Okay? All right. So, Simon is asking, if you have time, would you have gone long at the MA20? 50% pullback and FAB4 for support. Yes, that's a very good observation, because look, what do we do with this gap here? Fill it in, right? So actually you have like a hidden big bar here, okay? And this bar, very well observed, Simon, is actually coming back to about 50%, right? And it's also testing the upper boundary of the trap zone, of the FAB4. So you have what sometimes is called, with a difficult word, it's called confluence, right? There's like several things coming together here. The 50% is coming together with the MA20 here. Sorry, no, not the MA20, I'm wrong. It's not the MA20 what I wanted to talk about. With the top of the FAB4. So you have top of FAB4 and 50% coinciding here, and you have actually a great opportunity for a long here. I can see if you say, well, this is a little bit of a violent bar here. This bar is not very nice, right? Okay, so entering here, I don't know about that. I would probably wait here, but look, you get your second opportunity, because here it's a different story. Now you have a little bit more distance to that bar, plus you have something else. This bar here tried to go down. See that? It was trying to go further down, and it failed to do that. It couldn't do it. So you have a tiny tail bar here. So these little tails here is like a higher low, right? See that? So now you have extra evidence here. This is a different situation, so I think this is a great long here. Okay, see that, Simon? Okay, so Uber here, Uber trades by, oh, again by Hamsarai. Okay, lots of trades here. So bull elephant bar here in position plus. Okay, there it is, right? And he anticipates on that bar. Anticipates, but I don't really understand because there's an arrow here and it's not really clear where he's anticipating. If he's anticipating here, that is definitely wrong. It's way too early. If we anticipate, Hamzaraj, if we anticipate, then we do so in a bull elephant plus, right? I'll explain it once more. And in the upper third of the bar, somewhere here, not in the lower part of it. That is not anticipation, okay? So anyway, you're 2 lots long here, okay? I'm not sure what this arrow is about then. Stop. Should have used MLPT stop, but the risk was $90, so I used event stop. That's the wrong approach. You're now adjusting your stop to your risk profile. That's the world upside down. That's the other way around. What you should be doing is, how much can I afford to risk? Where should my stop be? And then see how many lots can I buy and still respect my max loss per trade. That's the way to do it. So for example, in this case, you may want to put your stop here and then say, look, how big is that, right? So if you would enter here in the correct way, probably here maybe, let's say you would enter at 20 and the stop would be somewhere, it needs to be somewhere at 20 or maybe 30, whatever. Let me just make it easier for you. Let's say you have an $80 risk already if you have a max loss per trade stop, which is required here because you're close to the MA200, right? $80 stop. So what's your max loss per trade? $90. So you can afford 1 lot. That's the way to think about it, okay? First place the stop. And then calculate from your entry point, how many lots can I afford? And the answer may be that you can only afford 1 lot. And then you have basically the choice. Do you want to take the trade? Or would you prefer to maybe look for another stock where you can afford 2 lots? Because a 1 lot trade is just not very attractive. There is really no trade management that you can do. It's a little bit of an all or nothing trade, right? It's not wrong, but it's just less attractive than a 2-lot trade. That's what I'm trying to point out. And the answer can also be that you cannot afford a trade. That actually the stop required, if for example, is already costing you $100 and you can only afford 90. Well, you wouldn't buy a house that is too expensive for you to pay the mortgage for, right? I hope you wouldn't, because you will probably go bankrupt sooner or later. And if you don't go bankrupt, your life will be very stressy because every month you will have to wrestle to pay for the mortgage. It's the same thing here. You cannot do that. Okay? All right, so he took 1 off here. Mistake took 1 lot off. I thought it was a whale complete. Okay, yeah, no, absolutely not a whale complete. We don't even have a leg here, right? Important point again. You have 1 bar here, okay? And we go sideways. But in a whale, what you have is basically, is your whale, right? You need multiple bars, at least 2, to make a leg, right? 1 bar is not a leg. It's just a bar. So there's not even a leg here, let alone a pullback. There's no pullback either. There's really nothing here. So so this is definitely not appropriate here. Okay. Pullback add, yeah, okay. Kind of a pullback. Adding here, okay, you can do that. Could have added here, that's right. And he took everything off here because he still was suffering from losses from yesterday, okay? I see. Well, obviously the right thing to do here is, for example, move the stop here below the collar, and then when it starts moving power trendish here, then you go with that MA8, right? And you trail it out, and this is the place to get out. Remember my talk yesterday about how I don't like to have the MA8 in your chart and why? And the funny thing is people put it in, but then when it's there, they don't use it. It's really actually very interesting. So I don't have it in my chart, but I'll add it to the chart and use it when appropriate. But sometimes I see people here, traders here, having the MA8 in their chart, and they're not using it when it's needed, which is actually very interesting, right? It's totally backwards. Yeah. Okay. All right. Carla, I hope she's in the Spanish room. I have no access to the Spanish room today because it's a different room from usual. Is she in the room, Juan? Oh, you're here. Sorry, you're in the English room. Yeah. Hi, Carla. Okay. See you now. Great. Intel, max loss per trade, 150. Okay. Let's see what you did here. First, a little comment. You know, I'm really a stickler for journaling, right? So you see, you're not really using this space to the upside here, and you're not using this space to the downside here, right? So your chart is very compact. It's like really, you can't really see the volatility, right? This way, you cannot really see. This could be a move down, right? Like this would be much clearer. The bars would be much easier to see if you did that. Okay. I just wanted to point that out. I don't know why it's so like this. So maybe it's a good idea not to do that. Okay, so number one, you short two lots here. Elephant bar location minus. Okay, you see an elephant bar here. All right, below the 200. 200 is there. It's actually it's even off the 200. That's even better, right? Off the 200, meaning that it actually starts from the 200. That's a very powerful play. Right? It's very powerful. And you enter by confirmation here. Two lots short. All right. Initial stop, max loss per trade. Okay. I like that. However, the way you're drawing it here is max loss per trade is actually almost on top of the MA200. That's not the idea, right? Your max loss per trade, the idea is that it's actually way above the 200. So remember, the 200 is a zone, and the whole idea here is really you're trying to avoid being stopped out in that zone, okay? Now you see I'm drawing it as a zone, and your stop here, your max loss per trade stop, is still right in that zone. So that's not the idea. Let's take a quick check at your risk here. So you're entering here, I'm not sure, but I think it is at 55, round number roughly. And here we have like 41, okay, 40. So that means that you have about 40 cents risk here. 40 cents risk, two lots. So your risk here is like $80 on two lots, okay? That is well below your max loss per trade. So what that means is that actually your stop is not here then, okay? Your stop is apparently here somewhere. See that? So it's just, you're just drawing it in the wrong place. It's actually much higher. So actually it is good because you do give this trade the room to develop and to use the MA200 in your advantage to bounce off there. That's the whole idea. Okay, so here we go. Then you say I should enter when the green bar was eliminated. Really? You mean here? But is it a bull elephant bar, a bear elephant bar at that point? Is there really an elephant bar at that point? I don't think so. It's too small. Yeah, color elimination. Okay, but you don't really have a downtrending, or at least I cannot really see it here. I don't really see this downtrending situation where you can enter on color confirmation, right? But perhaps that is because the chart is skewed and compressed. What you really want to see there is like a clear downtrend that is going like this, right? If you have this, then you can actually go by color takeout. But here I don't really see that. I think you actually need this here. You need this thrust to the downside here, this big move to the downside, wiping off everything to the left here, telling you, okay, we're going down. Because before here, you're just basically going up and down in this little area here. A little bit up, a little bit down. So there is no reason to see that the market actually has a direction here. Remember also that this is only trap zone here, right? This does not count. It's just resistance. So we're just going up and down a bit, and you're still in that trap zone, I think. I'm not sure. So I think you need this big bar here. Okay, so we go on here. There's an add here, right? You could have added to the trade here. See that? Mandatory add. This is a pullback. Push to the downside, pullback, and there we go. You do add here, however, but you can see this is much later. Adding here is much more favorable because then actually you make a profit on that move. Okay, this is a very late add here. However, technically it is correct because it's your first GBI in the move, and that is what the checklist tells you to do, right? Add on the first GBI, add on the first pullback. Okay, and now you keep adding here. Keep adding here. This is the second add. This is not a GBI. I should not add. I like that. This is not a GBI. That's very, very good observation. It's not a GBI because there's no preceding red bar, right? It's not a pause. It's more like a micro bear 180 or so. Okay. Then now you're starting to take profits here, or at least closing part of the trade, but on the way up. Why on the way up? What is the proper moment to take profits? New high, new low here, okay. But before you have a new low, you could have three pushes, right? So, but I don't see three pushes either. It's just very hard to see. Do you see because of the compression of the chart? I don't really see the swing, so I find it very hard to estimate here what you have, if you have any pushes or not. New low, there is no new low here, that's right. However, still have, yeah, you have like 20 cents here. Okay, yeah, that's also nothing yet. Okay, what you do have though is a power trend, right? I see all these MAs on the chart. Wow, there's a whole collection of them here, a whole bunch of them. Look at that, 4 at least, very colorful. So you can use this is a power trend, right? This is a power trend, so you could use the MA8 here to trail this out. And then you would be out here, okay? But you cannot just start closing the trade because it goes against you. There's nowhere in the list there is any instruction to do that, right? So it looks to me like a trade that just didn't really work out very well. You entered here, so that's roughly at 55. The lowest point that it got to was like 80, so it dropped only 20 cents. That's very little, and then it just started drifting right back up there. So that is just a little bit unfortunate. It didn't really work very well. But after this move here and detecting the, you see, the point is there is no pushes. You see what you want to see, of course, is pushes to the downside, right? You want to see this thing move. This bar here suggests that this thing is going down, and it's not happening. It's actually starting to drift a little bit. So it actually turns out to be more of a power trend. That is a good reason here to say, okay, then I need to trail this out using a power trend, right? 2-bar stop, so out here. That's what happens, and then you are roughly out at probably at break even. Okay? So this add is very late. This add here, or if you want to wait below the green bar, this is the point to add to the trade. That's your first opportunity. And remember, if you add earlier, that may feel risky. However, it's actually the other way around, because if you get stopped out, you lose less. If you make a profit, you earn more, right? Okay, hope that helps. Another journal by Carlos. I also always have to look very carefully with these as well. See many bars here. Okay, Elephant Bar. triple plus. Okay, you're using a different notation here. Triple plus meaning what we call single plus. Okay. So you're entering here on this elephant bar as soon as it breaks out of the trap zone. Okay. Stop. Event, I guess. Let me see. Yeah, event. Anticipating. Okay. Okay, anticipating 2 lots. All right. As soon as it breaks out, right. Then it drops back into the zone here, and then you actually go stop and reverse here. Oh yeah, this one got you really well. Oh my God. Yeah, stop and reverse. This I can see. This makes sense, because now once it gets here, the reason for your trade is totally gone, right? This is totally wiped out. There's nothing left. Plus, you're not shorting straight into support. So I can see this stop and reverse here, and then it goes all the way back up again. You get stopped out again. Oh, you decide that you still had some money left in your account. Okay, so you throw some more money at it by going long again. Oh my God. MLPT, or was it MLPD? Let me see. 2 lots, 20 cents. Okay, yeah, right. Okay. Yep, this is yeah, let's call it a funny one, Carlos. This just happens. This doesn't make any sense really. It goes up, it goes down. It's the way it is, and there's not much you can do about that. Okay, so all right. So yeah, it was more like revenge. Well, there is this thing sometimes. It's a little sidestepping maybe, but I remember myself a couple of years ago wrestling with something where at some point I sometimes got in this mood where I kind of gave up, right? Meaning that you just start to just do whatever you see there. You go like, it's not working anyway. Click buy. Well, let me turn around again. That's something very, very dangerous, right? I think most of you probably know what I'm talking about. If you sense this in yourself, I think it's very important that you start to detect that in a very early stage. And it's very easy to start reasoning to yourself like, well, you know what? I'm on a simulator account anyway. Who cares, you know? And I'm almost at max loss anyway. Whatever. Let's give it a shot. If you detect that, then basically you have lost total control over yourself. That's really what it says, right? And as innocent as it may seem, it's not. It's not, because basically you're training yourself to start irresponsible behavior just in order to get rid of the bad feelings and the stress. That's what you do. You're rewarding yourself. It's called negative reinforcement, right? You're actually reinforcing yourself to do this because it feels good, because you distance yourself from the trouble. So tomorrow you may be doing the same thing again, right? So that is something to really pay attention to. If you feel that, so it's funny, Carlos, and thank you for sharing this. However, I would actually say that it's just too much to do that, right? You basically, probably you just let the market trade you here instead of the other way around. At this point, it's probably better to give up, wait for it to go, then pull back and then try again. See? Okay. I didn't want to do it. I know. I didn't mean to kill you. No. You lost control of yourself. Yeah, of course. No, exactly. But what I'm trying to point out is that this is also a part of your development as a trader, right? To become aware of these emotions that are running around in yourself, to detect them, and actually learn to act upon them, or actually not act upon them. Just acknowledge them basically and move on, right? And this is why you share the trade. Yeah, I really appreciate it, Carlos. I can feel that. Yeah, excellent. Thanks a lot. think it's a good lesson for everyone. Okay? I'm skipping that one, Carlos, if you don't mind, because there's like 2 more trades left and people who haven't really had many trades discussed yet, so I'd like to go over those if you don't mind. The first one here is by Simon. Simon is trading Chevron here, and he sees this little bar here and says, I have a position triple minus. All right, triple minus, that means very, very much down south. And the event is a bottoming tail bar. I think you mean a topping tail bar, right? I think you mean a topping tail bar. Okay. Entry by confirmation here and stop event. Okay. Interesting trade, this one. I really like this. And I'll tell you why. He says triple minus. Okay. So triple minus, why? Well, look, we have 106.20 here, and the market actually opens at 103.80. This, ladies and gentlemen, is a $2.40 drop. $2.40, right? That is quite a lot for Chevron. So in itself, that is already a reason to call this triple minus. What is the other way to find out if you likely have a triple minus situation? Does anybody know? There's a keyword for that. What is the best way to say this is a triple minus situation? Yeah, ATR, but that is all little complicated stuff. There's a very easy, quick way to see it. And ADR can back it up, right? That's right, Gregory. If 50% here, so we're opening here, right? And this is, so 50% here. If the market would go back here to 50%, all right? And you would actually say that move up, suppose you would be going long here, right? Let's just assume going long here and move back up 50%. And you would tell yourself this 50% here, you have a great trade, all right? Well, in this case, you would have a $1.20 profit on the trade, right? A lot. So you would be so happy, you would be cheering that you would run out of your office just to high five anyone that you find out in the street, right? So this is why we call this the high five criterion. It's the high five guideline, the high five rule. If your gap is so big that a pullback 50% into that gap would give you a great profit on a trade, so I'm not talking 30 cents, I'm not talking 50 cents, okay? Talking something really sizable in relation, of course, to the volatility of the stock. Then you have the high five rule, and that is a good reason to say this is a triple minus trade. Triple minus meaning, what do we do when we get to triple minus? So you assess here, this is a triple minus open, right? So what is your preference for a trade at this point? In which direction? Long, that's right. Is there any preference for a short trade as well? Is there any preference for a short trade as well? Or would you be avoiding short trades altogether? No, there's definitely a reason to go short here. So that's what I wanted to point out. In position triple minus, you have a clear preference for long. Okay, I agree. So if you get a long entry here, a long event, that is a good reason to give that a shot, okay? However, triple minus doesn't mean that the market cannot go lower. It can. Look at this chart here. It went a lot lower, actually. It went $2 further down. So you can take a short trade here as well, provided, of course, that you have a good entry event, preferably a low risk entry event, okay? So you just in the triple minus situation, basically you let the market decide, where you will probably play light on the way to the downside here. So your short should be light and the risk should be small, okay? That is, of course, obvious because you have already this very big gap. But there is no reason to skip short trades here, not at all. If you have a good situation, then you should just take it. All right? And that's exactly what Simon did here. And that's why I like this. He shorted below this tiny topping tail bar. I can't really see how much the risk is. I guess it's like 50 cents or so. I'm not sure. It should be because his max loss per trade is $100. So he could not have afforded more than $100 with 2 lots. So I'm assuming that this is like a 40-cent bar maybe, or I don't know. Okay, 40-cent zone. Yeah, exactly. Right. So that is a small risk given this situation here, right? So he shorts here 2 lots. Very brave. Very brave. He says, okay, I know that long is preference here, but in this case, short is definitely an option provided I have a good entry. And that's what he has, a good option. Okay? So going short here, and then the question of the pushes comes in here. What about the pushes? Okay. Yeah, well, in this case, of course, would you go for 3 or 2 pushes? 3 or 2 pushes? Anyone? Yeah, 2, of course, right? Because you're already so far down, it doesn't make sense to expect 3 pushes down here. 2 is enough. So the first push is in this bar here already, right? This is like 40 cents push here. See that? Because we got in here. So this must be 40 cents. Now we go sideways. This is not really a push maybe. But here somewhere, here's definitely your push, your second push. So I think you pointed it out really well, Simon. This is a great profit take. It's actually, I would probably take profits a little earlier, to be honest, but you got it really, really well here. This is absolutely great. Okay, so you have your profit take here. Now your stop is, you're moving your stop to here, and you're moving it to, oh, wait a minute. No, you should be, okay, wait a minute. Now there's something here. You have this big bar here, right? So this is a great situation for a big bar stop. See that? I think you missed that. Big bar stop here. And let this work. Let this pan out a little bit. Okay? This bar should not be taken out anymore. So what happens is it has some follow through. Now it's important to read the bars. Follow through. Up again. Up. It tries again to go further down south. It cannot do it. See that? It makes a little bit of a higher low here. Okay, so this is not really a point anymore where this big bar stop is really valid. It's about time now to move that stop down. Okay, this is the point where I think you can move it down and you get stopped out here. Perfect. So I really like this trade, Simon. I think it's absolutely great to do this. Personally, I'll tell you what I did. I took this trade as well. I did not short it here though. Because I found something else that was more attractive to me. I don't remember, some other trade. I found more attractive, so I skipped this part. But when it took this floor here, and it took out this floor, this is where I shorted it. Okay, and I used the MA8 stop here, then went to the big bar stop here, and then went exactly like you. I took that bar, and I was out of the last lot there. Okay, so great trading, Simon. Congrats. Thanks for this one. Okay, I think we have, I don't want to make it too late. Let me quickly see what we have left. Greg, yeah, I think we did not do a trade by Greg yet. So let me cover a trade by Greg if that's okay with all of you. And then I think we should leave it at that because otherwise it's getting really late, right? Okay, so Greg is, again, nice pointing out, max loss per trade, $80. Very good. And then, oh, he has a question here. We'll talk about that later, okay? I have to read that. First, let's look at the trades. So, Fabulous 4, eBay. Identification, bottoming tail bar here, all right? 2 lots long on confirmation in area plus. I think everybody sees that, right? This is the plus area above the Fab 4 here. This is a bottoming tail bar, so this is just a long. Don't think about it, just do it. Long, this is what the checklist tells you to do. Stop. Stop. MA 200 here, event here. What do you think in hindsight, Gregory, about this? I think this is a clear case of max loss per trade. Yeah, the trade is far, but the stop is not. The stop, it's what we're talking about, the stop. Your event stop is here. And that event stop is I think it's like 7-8 cents from the MA 200. See that? Really nothing. It's very close. And again, the reason why this is important is that the MA 200 is really a zone, right? It's like this. This is the way you should look at it. It's a zone. This is number one. Point number two, what does the MA 200 represent? I told you guys this a couple of times. Why is it so powerful? Why is it so powerful? Exactly. Glad you guys are starting to see this. It is actually the MA20 in the 15 or 20 minute chart or the 18 minute. It doesn't matter. Somewhere up there. So it's representing an MA20 in a high time frame, and we know the MA20 is very important, right? So no, it's not the Haas. The Haas is the MA200 in the 15. That's different. Okay, so that's why this is so important, and this also means that a pullback to this MA200 in many cases will give you a bounce, and you want to use it. So basically, by putting your stop max loss per trade, you're saying, okay, I'm going along here, and I have all these defense systems backing me up in case it goes wrong. That's basically what you're saying here. This is why you want to use max loss per trade here. Okay, Greg? So event is really wrong here. Okay, so long here, 2 lots. And then, yeah, this chart is, of course, developing really bad. There is no follow-through here. What you want to see now is follow-through, of course. Instead of that, we see that every attempt to move up is actually failing, right? You see all those stopping tails. Every time the market tries to go up, it comes right back every time. Then we get this big red bar here. This one is sort of looking ominous, of course. This is not the kind of bar that you want to see in a long position, especially after the market has already shown that it cannot follow through to the north. Okay, so here it tries again. Here, see that? This is like a kind of a pullback, right? And it tries again, and it fails again miserably here. So ultimately, it goes back, and you get stopped out. Let me see. Oh no, you get. Let me see. Oh, wait a minute. Yeah, you get stopped out here, right? There's your stop. Stopped out. And then what happens is you try again. Okay. Do you see that if you had a max loss per trade, the second attempt would not be necessary? This bar here is the exact reason for the max loss per trade. Of course, you want to see it go this way, of course. Well, it didn't work this time. But you see, this bar is testing this zone here. And it's actually doing exactly what you are trying to go for when you use the MA200 as a defense line to cover your back. Okay? It's exactly what you want to see. So this bar is great news. It's an ad, right? If you are in this position with a max loss per trade, then what you do here, this is a great ad here. Because this tells you this thing is now likely going to the upside. Well, it didn't. Okay. All right. This is eBay today. Okay. Oh, it is. Yeah, right. Look, there it is. Yeah. Anyway, so, and then you close this trade here. Okay. That's not really what we do in the checklist, of course, but okay. All right. Yes. So, great identification here, okay? The max loss per trade stop, of course, we spoke about that, so this is wrong, but great identification, and otherwise, all I can say is this play just did not work. It did not work. And with a max loss per trade, this re-entry would not have been necessary, okay? So now you want me to comment here on the efficacy of this rule. Immediate failure of a very strong pattern causes immediate trade termination. I think you can guess my answer. Can you guess my answer to that, Gregory? If you know me well enough now, I think to know. No, you don't? Okay. Well, the answer is it depends on your level of development, or your state of development as a trader. Okay? I totally get it. An experienced trader will probably be out of this trade maybe here, for example, right? Because I just gave you the candlelight story, right? I like to call that a candlelight story. So spelling it out candle by candle. So no follow through here, failure to the upside, strong move to the downside, another attempt to go up, failure again, going down. This trade is over, right? This is exit for an experienced trader, okay? But the problem is that many of you, and you should judge for yourself, many of you will not really see this in the level of detail that is required to really take this kind of decision, okay, at this point. And what you will see, though, instead of this, what most of you will see is their profit and loss going up and down, okay, which causes fear inside of you. And the fear will push your ego mercilessly to come up with a great reason to exit this trade. That is what most of you will probably be experiencing here. Now, for you, that could be different, Gregory, because I think you have a little bit more experience. But again, this is something that each trader has to figure out for themselves. And as long as you don't have enough experience to distinguish the fear, or actually I should say the fear-driven rationalization of your reason to get out of the trade, as you cannot distinguish that really from just objectively looking at the chart and saying, look, this thing is failing, then you should just respect the trading plan, which is always a good thing. You just get out with a full loss here. It's not a problem at all, because that builds trading character, right? Every time you do this, every time you just are being stopped out here and you don't try to cut your loss short, you become a little bit stronger as a trader. You become a little bit more immune to the losses. You'll become a little bit stronger in being able to resist any attempts that the market makes to bull you out. See, it's about you being in control instead of the market being in control. It's about you trading the market instead of having the market trade you. That's basically what this is about. And that is a quality that can only be acquired by lots and lots and lots of practice. So each time that you just sit here, so there is an in between. There is a moment, there is a time when you can actually do both. I'll tell you what you can do. So your stop is here, right? And now you have developed to the point where you think that you're good enough to see this. So you see this developing. You see the double failures here, okay? The multiple failures to actually do it. So you write it down. You make a note. You say, look, I think when the market is here, right? You write down, yeah, I think I should be out here, okay? But you just let the trade work out. So you can actually see if you are actually good enough to kill this trade prematurely. And if you keep a list of 20 of these trades that you cut short early, and you find that actually you're making less of a loss or more of a profit, whatever, well, then you're on the right track. And you know that it's time for you to start doing this and to actually cut those trades short, because apparently you're good enough to see the difference between fear in disguise, fear inside of you of a loss, telling your ego to come up with a reason to come out of the trade, versus an objective look at the chart and actually seeing that the chart is actually failing. Is this clear what I'm trying to bring over here? Hope this resonates with some of you. It's not always easy, because I know it's very difficult to be so patient and allow yourself that time, which is often actually measured in terms of years instead of months, okay? It's a long process of maturing as a trader, and by just sticking to the plan. The ability to stick to the plan as Oliver always points out, the ability to stick to the plan and just do what you promised yourself you were going to do instead of changing the plan again halfway to trade, the ability to do that is a major accomplishment. Most traders never get to that point. They can't do it. And most of those traders ultimately fail. They will never make it to the end, okay? So, wow, with this sermon, I think it's a great moment to close off this, to end this session. All right? Yeah, Juan, okay. Yes. So let's see what else here. Andrew, I have a question. I recently joined the master program. Should I keep practicing in my current account or start activating the master trading account? I am not sure what accounts you are using. Are those both graduation accounts or are they simulator accounts? Or I'm not sure what account you're trading here, Andrew. Thank you, Juan. Both are sim. Well, I think you can trade either one. It's maybe one is a practice account and the other one is a graduation account. Is that what you mean? Or both are graduation. Well, you should focus on one graduation account then, because you can only graduate once, right? So I think you should contact accounting then and tell them that you want to just move on with your master account. The one that gives you the highest payout on graduation, of course, that's the one you want to move on with, and then close the other one, because otherwise you're paying twice, right? What you can also do is decide to change your other account into a practice account. That is also it's actually, if you can afford it, it's a good thing to do. I think to have a simulation account for graduation and a simulation account for practicing. The only difference is that the practice account, the results don't count for anything, so you can do whatever you want there, and also there is no I believe there is no stop out, no max loss per day on a practice account. Am I right? Yes, I think I'm right. There's no max loss per day there, so you can basically do anything you want there. And of course there's an extra charge, but for example, you can for example practice do the open on your graduation account. And then later in the day, if you want to practice your skills, then you move over to your practice account. So it's obviously more difficult to trade in the second part of the day, and those results will not affect your graduation account then. Okay, so that is I think a good thing to do. I would definitely recommend that. Yeah. All right. Any other questions at this point? Oh, Gregory, you had the same thing. Okay, yeah, and it goes inactive after a while. Okay, yeah, that could be. Mm-hmm. All right. So to be sure, tomorrow's no session, right? That was our first attempt. Tomorrow, I think there will be a self-start session at 11 a.m. New York time. So I think I will see all of you there. And then we'll be back at this on Monday. Let me check. Monday is not a holiday in the USA, is it? Markets are open, right? Because I think in Europe, most of Europe, it's a holiday. But can anybody check that quickly? Is Monday a holiday in the USA? I think the 31st of May is President's Day, if I recall correctly. It's open to, okay, perfect. All right, great. So we'll see each other on Monday at 11 a.m. New York time as usual. So looking forward to see all your journals come in, and we'll move on from there. Okay. Have a great Friday and the weekend. See you on Monday.